Welcome back, everybody. So here's the funny thing. On a nationwide level, we're seeing that buyers are seeing a few more choices. We have lower prices on some homes. Is that the case that's going on here? Or is that just more of a other areas nationwide trend? We're going to go through that. We're going to go through our weekly metrics. We're going to talk about what our market is doing so you can make the best business decision in our market area. And, well, let's have a little bit of fun doing it. Okay, so when we take a look at the market and we look at it each week, we're looking at residential only, all right? We're not including condos in this report. That's a different video altogether. And this way, it's a consistent metric each and every week, which allows you really to make just really good decisions. No, this is not scripted. Yes, I do this every single week. And yes, we do have our information that is available online. Remember to check out the cities where we have in real time city updates, city of videos, and this way it allows you to kind of, take this and even dial it down a little bit tighter. They're free. There's no marketing. There's no pop-ups. It's just good information for you. All right, let's talk a little bit about what's going on. So, yes, buyers are definitely seeing more options. When we talk about pricing, we've been pretty flat. We're pretty sideways. We're not seeing any, monumental ups. We're definitely not really seeing any downs. We've seen probably about a 1.4, 1.6% improvement year over year. That's not great, but hey, it's not down. So by the end of the year, if rates keep kind of ticking down, they've been more sideways also, then we are absolutely going to see an improvement in pricing. Inventory is already dropping with some of the better rates anyway. We'll go over that. So when we take a look at this chart right here, you can see our average sales pricing as far as where we're seeing things, where volumes are going. And as you can tell, well, we saw the greatest amount of pricing and whatnot, and the maximum amount of refis, when rates were down in the, 3s and 4%. That's when the feds bought the rates down artificially. They felt that they needed to do it in 2020 because everybody was supposed to be staying home, but they weren't. They were out looking and buying homes. 70% of all of the different mortgages that are out there are in the 4% and lower. We call it the golden handcuffs, and that's why we're not seeing a lot of movement. We have been seeing some cancellations of listings, but not a great amount because, yes, they may cancel, but then they come back on with different terms and whatnot. All right, so if we take a look at what's going on just in the news, upper left, so buyers see more choices, lower prices in some home market areas. We have high prices and rates keep home sales near cycle lows. That's pretty much true. Then when we take a look at the mortgage finance, you can see that we're at about 6.81. Again, we pop around actually quite a bit between 6.75, 6.8, 6.68, pretty much around 6.75. Why? Well, honestly, that's a pretty common average interest rate, and our metrics are staying pretty consistent. Job reports came in kind of so-so, improved rates. But CPI came in a little bit lower than expected. That knocked up rates. So when we take a look at it, remember, it's based on the stock market. It's not based on what the feds do. Everything that we see mortgage-wise is related to the stock market as it is publicly traded, okay? We do not expect the feds to drop rate probably until September. I say that because, well, that's just the way it's going to be. They've already met, and the next one is in September. And so right now we're kind of staying the course. Yes, in September, I think we will see a 0.25% rate drop. that is going to probably drive up mortgage rates again. Normally they will follow it going downward, but the last 4 or 5 times when the feds go down, mortgage rates have gone up. So anyway, keep that in mind. All right. So if we head over and we talk a little bit about what Freddie Mac is doing, they're running 7-day average. Look, we're at 6.75 with these guys right now. That is lower week over week and year over year. And as you can see from our trend there, we are super sideways. Yeah, we had our dip, as you can see on the far left there. And that's when the feds changed dropped their rate by 0.5 point. That's when that went up. And ever since then, minus a few little hiccups here and there, we are super, super flat. Mortgage rates, without a doubt, drive probably the biggest factors for buyers re-entering into the market. There's a gaggle of people that are sitting on the sidelines, kind of, moving in and out, depending on, hey, does a home meet my criteria? Where are rates at? And they will move in and out. Right now, you're going to start to see a little bit more of the in. But remember, you have free access to a advanced mortgage comparison. You can put 4 mortgages together. It's a free. There's no ads. We'll put the link down below. And then there's a video, 5 questions you must ask when getting quoted mortgage loan rates. Watch that video. Listen, you can either get caught up in marketing, or you can be knowledgeable and know what to ask when getting quoted a mortgage rate. That's all it is. There's no advertising, and it's free. Write down the questions, make sure you ask them, and make sure you ask at the same time every day. Do not ask one lender in the morning and one lender in the afternoon. You get completely different rates, and you have misinformation that you'll be making a decision on. All right, moving on. So when we talk about what's going on in initial metrics, what are we looking at as far as days on market? We're at about 29, 30 days on market right now. Pretty much the same when we talk about the list to sales price. And that is, again, same as last week, no change. When we look at our running 7-day average, look at that. We had 1,104 homes that came on market, but we had 1,218 homes that went off market, a difference of approximately 114 homes. So wait a second. If we're looking at and saying, hang on a second, people are saying sales are slowing down or the market is changing and whatnot. If we are taking off more homes than what's coming on market now 2 weeks in a row, whereas, during our busy period, we actually inverted that, right? We had more coming on and less going off because we had a lot of sellers coming on the market. But now we're back to more homes going pending than are coming on market as we are drawing down that inventory. But a small amount, 114 homes, that's not a big deal. What is a big deal is the consistency of the trend that we are seeing. What is even more important than that? You betcha. Come here. Make sure you watch the channel because it's super accurate. You get some really great information, and it allows you to make really good business decisions like this when we talk about the Northwest MLS. Now, look at these metrics. All right, let's blow this up. Okay. When we take a look at the upper chart, when we look at the year to date, our sales are up 1.5% as far as volume, actual number of homes sold. Pending are up 2.6% year to date. All right. Now, when we look at the lower chart, okay, so for the month of July, which we're nearing the end of, which is crazy, we're down, basically 49 homes, about 1%. Not a big deal. But when you take a look at the number of pending at 14, basically 14% more, well, we're about 730 homes more pending than we had last year. Now, what's super important is remember the closings that we're seeing, showing up in July. Well, remember that was from June. Those are June sales. And in fact, a lot of folks are talking about June sales now saying, hey, you know what? We started seeing more June sales. Well, okay. Well, we knew that back in June. This is real-time information, so make sure Put your information down below. Ask your questions. There's no strings attached, okay? We will answer you normally in about 30 minutes, except for on Sundays. All right, moving on. If we take a look at some deeper metrics, let's take a look at this. So when we take a look at the actual sales price, we're up 0.9% across the Northwest MLS, single family only, down just a tad bit for the month of July. And those numbers are technically both higher than what they were last week. That's super important information because it allows you to understand that we are progressively moving forward each and every week. So we were about $2,000 higher than we were this time last year, this time last week. So we've just seen, again, just another incremental increase in price. Some of that because of activity, because of homes available. We are seeing more homes that are available online, albeit we are still only about 65% of what we were pre-pandemic, meaning 2019 and earlier. All right. So if we take that and let's dive into new construction. New construction also has been making a nice little improvement. As we can see here, let's blow this up a little bit bigger for you. So the upper side, look, they were down actually 11.7% last week. So they've improved. They've closed the gap. Same thing with pendants. And as you can see here, for the month of July, they're only off 89 homes. That's actually pretty good year over year, considering they've had a lot more new construction or existing homes coming back on market, or what we call resales. Now, you might say, George, well, what does that mean? Well, remember before, new construction was very dominant because we just didn't have a lot of resale homes. I don't want to call them used homes because that's not, you have a used car. We have a resale of a home that has come on market. We have a significant increase in that inventory, which we were desperate for. Well, builders now had to make adjustments. So they lost market share over the last 2 years. That's why everything is pretty much going sideways. It's not going up. It's not going down. We're going sideways. We are not like some of the other areas in the United States. Again, very much a very protected market. So when we come in here and we take a look at our pricing, look, week over week, we're up $20,000 for average sold price than what it was last week. It's 0.5% above, or just a few dollars above what it was this time last year. And year to date, they're up $2,000 what they were last week, or 1.5% where they were at this time last year. So new construction is still going up price-wise, albeit they are offering a lot more incentives. So there's a lot of incentives being offered with new construction so they can compete with resale home inventory that is out there. Okay. Now, if we delve into the ugly stepchild of REOs or bank-owned homes, again, those are not very exciting. There's not very many of these homes out there. And in fact, when we take a look at the REO inventory, even though it says, oh my gosh, George, for the month of July, look at that. It's 125% more sold in July. That's 15 homes. That's nothing, right? They might say, oh, look, foreclosures are up, 26%. That's 20 homes. And in fact, they're not even legitimate 20 homes because we have some homes that are actually being listed that are not foreclosures, but the agent did not put them in correctly, and they show up as foreclosures because they hit the wrong box when they were checking the listing. So actually, it's closer to about 12 more homes than where we were at last year. Pretty much small potatoes. We don't have a huge REO inventory here. There's some, misleading information out there that is driving a certain tax benefit to help people that are, quote unquote, going into foreclosure when our default rates are super low. In fact, we're one of the lowest in the nation, but they're using misinformation, in my humble opinion, to take more dollars out of your pocket. Because, well, again, socialism only works until you run out of money. There you go. All right. So if you guys have any questions, put them down below. Make sure you enjoy your day today. Smash that subscribe button. Let us know you like it. And in the meantime, you guys have an absolutely beautiful day. I'll catch you on the next video. Take care.